Hey, it's Jack from Alphacharts with a state of the market video. Today is July 21st, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you all for watching the video. Please like and subscribe if you haven't yet, and you can follow me on Twitter or X at Alphacharts365. I have up here basically earnings for this week. These are not comprehensive, but it's quite a bit of them. Some things to look out for: Tesla, Alphabet, Visa, UPS. Like these are huge names, right? Capital One's in there. Chipotle's in there this week, right? That's a big one. What else in there? Rayathon's in there. Again, it's just chock full of earnings all week long. Some of these big mega caps. Tuesday's a big day. So just be very aware of that. Okay. Let's get into these charts. All right. So we have the SPY, and we had 3 really rough days of selling. I hope you all stayed safe during that time. Definitely not a fun time if you are long or very long the markets. Um, as we can see, it's also with an increase in volume. So you see the decrease in volume as things started to move higher. That alone is not a reason to sell, though, right? We identified this broadening formation, right? Increased volatility usually happens from broadening formations. That alone, though, is not an increase to sell, in my opinion. But when you start seeing gap downs and selling pressure all day long, that's a reason to get cautious. You see follow through the next day on increased volume. If you weren't starting to sell here, you better be selling here. And as we keep going down, we're getting more and more of that selling pressure. So, listen, we don't know how low this will go. Obviously, no one can see the future, but the 50-day is here. I wouldn't be shocked if we see some rebound here, some chop here, and maybe like a leg down, maybe tagging the 50-day. Again, I think the 50-day is the next line in the sand. We'll call it, 540-ish. There's a little gap right here. Maybe it fills this little gap right in here, all the way to 537-ish or so. But either way, the pressure right now is to the downside. Now, President Biden just announced he will not be seeking re-election, which opens up the chaos for the Democratic Party. Again, we don't know how the markets will react to that either. So yeah, a little caution is warranted just from this one chart, right? But when we look at the RSP, we see where it's a little bit different, right? You see on the volume, right? As it's going down, we're seeing a declining volume, and we're seeing that, again, there's some selling pressure here, but it wasn't quite as bad as the S&P, right? And mainly because if you see it here, we crossed the 23-day, and here we barely are basically sitting on top of the 9-day. Big difference. Also, you have this kind of horizontal. Oh, I'm not kind of this little horizontal area right there. Again, I don't know if that's going to hold or not, but it's there. So anyway, so you see that it's more of a rotational market as well as, I mean, things are getting sold, don't get me wrong, but I think there's still a lot of rotation to be had. Here's the Qs, almost down to the 50-day already. So you see it's much weaker, which again puts this Tesla and Alphabet way more and Visa even in the spotlight. IBM's in there as well. ServiceNow. These are all in the spotlight because if they don't report favorably, this can potentially even come all the way down to retest the breakout. That wouldn't be out of the question, and the longer term uptrend would still be in play, right? We kind of saw, it could be something like this, right, where it just kind of broke the 50-day, didn't quite get down to the retest, and it went higher after that. So we'll see what happens, but you definitely see how the Qs and technology is much worse in general. And here's the equal weighted. Listen, we were real happy when this was breaking out, and then it failed. And that's a failed breakout of equal weighted NASDAQ. And it is all the way down to the 50-day already. And this can be a very dangerous look Again, just adds into our cautious stance, right? This was very, very good. And this gets very dangerous now that we're back below that $90 area. Big deal. That's a big deal. Mid caps, again, also took it on the chin. Again, potential false breakout right there. Not a good look. Small caps, try to move higher, couldn't. But look how much stronger small caps have been, right? And there's gap ups, and again, the decrease in volume. Let's see if mid caps have that as well. And not quite as pronounced. But you see the decrease in volume as the selling happens, which means the sellers might be getting tired, and that's interesting to me. Okay. Uh, again, we don't know the way the markets are going to digest the Biden news yet. It's still early. So XLF breakout. Here's your pullback. Again, not looking terrible, and we've had a lot of those earnings all the way already out of the way. So that's a positive. I think that that this actually looks a little bit better than some of those other charts, and so I like that financials are holding up well. Semiconductors are below the 50-day. There's really no reason to be involved in this area right now. Below the 50-day, you see the crossing rather than smaller term moving averages, and my guess would be, let's see how many days that's been. 36 days. So if it stays below there, we're going to start to you're going to start to get rid of this data in here, and we'll be in a little different situation. Um, we'll keep watching and see what happens, but never good when it breaks below the 50-day, right? That's a pretty bad sign. Equal weights are right at the 50-day, so again, we'll see how that all shakes out. But if it comes back into this area, which is kind of sitting right there now, but hasn't come in back in yet, if it keeps falling, that's in my opinion, a very negative sign. Here are transports. So transports, we're looking a little rough in here, a little rough in here, but they rebounded great, and again, very powerful sign. And then you have the sell off. Now, the nice thing that you see is, if you notice this Friday candle, nice little bullish hammer right there. Again, maybe the selling just got overdone for a couple days, and we're going to see some sort of, I don't call it a bottom, but some sort of support put in there. And here's the equal weighted transports. Again, you can see the buyers kind of did show up, and overall, just a kind of a choppy mess. Not really too lovely in that one. And here's housing. Housing is starting to turn back up, and this is actually looking pretty good. Look how much better this held up versus some of the other areas. And XHB, same idea, kind of that's kind of what it looks like to me, right? Some sort of flag or something like that. Now, again, could it fall? Absolutely. But overall, it looks pretty good. So just looking at all this, I mean, I think that we have caution depending on where you're at. Well, caution no matter what. But, definitely technology looks worse right now than, mega caps look worse right now than maybe some of the small caps and interest rate sensitive areas. All right. Good luck this week. Again, don't forget your earnings dates. Don't forget to follow me on X at Alphacharts 365. Hope you all are doing well. Take care.